Welcome to the deep dive. Today we're looking at an investment area that, well, maybe flies under the radar a bit, student housing. But it's actually proving itself with some pretty consistent returns, and we're not just talking basic dorm rooms here. This is becoming a really quite sophisticated asset class, attracting serious investors. For this deep dive, we're drawing on some great sources, mainly bits from Student Housing, an investor's guide to stable returns, and we've also got insights from Dr. Pooyan Ghamari. He's a Swiss economist, founder of the Economist platform, knows this space inside out. So our mission today, to pull out the really key stuff. Why student housing? Why now? How's tech changing the game? What do you actually need to know? We want to give you that shortcut, some surprising facts, clear insights, the whole deal. Okay, so let's get into it. Why student housing? I mean, of all things, why is it grabbing serious investor attention? Seems kind of niche.
Yeah, it can seem that way at first, but the core appeal, it's that stable, long-term rental income. It's really fundamental. And a key thing Dr. Ghamari often stresses is its anti-cyclical nature.
Anti-cyclical. How so?
Well, think about it. When the economy takes a downturn, a lot of residential property struggles, right? But student enrollment often actually increases. People go back to school, they want to upskill, maybe ride out a weak job market.
Oh, okay. So demand doesn't dip, it might even go up.
Exactly. That fundamental, consistent demand for education, regardless of what the wider economy is doing, that makes student housing incredibly resilient. And that translates directly into, predictable cash flows and really quite low vacancy risks compared to other sectors.
That's a really interesting point. Not just stable, but potentially counter-cyclical.
Okay.
But what about the really big fish? The institutional investors, the ones with serious capital. What's drawing them in specifically? Is it just more stability or is there something else?
For them, it's really that combination of yield stability plus scalable management. That's the sweet spot. Student housing ticks both boxes. You get those steady rental streams, usually tied to the academic year, maybe semester or annual leases. Super predictable for their planning.
Okay, predictable income. Checks that box.
Right. And then there's the operational side. Bulk acquisitions, they're just much more efficient. When you buy entire portfolios, not just one-offs, you get economies of scale, it brings down your per unit costs, boosts the overall performance.
Right, managing one large building is easier than 50 separate houses.
Precisely. And Dr. Ghamari points out that projects near strong universities, those major education hubs, they consistently show lower volatility than, say, standard apartment buildings. It comes back to that strong location-specific demand that isn't quite so sensitive to economic bumps.
Location, location, location.
Yeah.
But powered by academia. So scalability is key. But what were the big hurdles to achieving that scale before? How is tech stepping in now?
That's a great question because historically, getting good market intelligence, ensuring transparency in transactions, those were real challenges. It could be opaque, but this is exactly where technology is making a huge difference. Today's sophisticated investors, they need precise data. Platforms like Economist, for example, they offer these really comprehensive toolkits. You can analyze regional student numbers, university growth plans, even granular rent trends.
So spotting the high potential markets before you invest.
Exactly. Way before. And then you have blockchain starting to play a role, which sounds complex, but...
Yeah, break that down a bit. Blockchain and property.
Think of it like a super secure, shared digital record book. Every transaction, leases, payments, ownership changes, it gets logged instantly, permanently, transparently. Systems built on this, like the ones Economist integrates for property management or title verification, they just streamline everything. Less paperwork, fewer disputes. It massively boosts investor confidence because it's all verifiable, all secure.
Okay, streamlining and confidence.
Yeah.
And you hear tokenization mentioned too. How does that fit in?
Right, tokenization. It's basically taking a big asset, like a whole student housing complex, and digitally dividing it into lots of small, tradable pieces or tokens.
So you can buy just a small slice.
Precisely. It allows for fractional ownership. You don't need millions to get involved. You can buy a small stake. This really opens the door, broadens the investor base way beyond just the huge institutions. And it makes the investment more liquid, easier to buy and sell these tokens.
More democratic access, more flexibility.
Yeah, and Dr. Ghamari really emphasizes that these digital tools align perfectly with what modern investors want. Transparency, the ability to diversify easily, and just a simpler way into asset classes that used to be hard to access.
Okay, so tech is making it smarter and wider. Let's zoom out again. What are the bigger forces, the sort of macro trends, really pushing this demand for student housing? It can't just be the asset itself.
Oh, absolutely not. There are several big global trends converging here. First, you've got way more international students crossing borders for education. That's a huge driver. Plus, generally, access to higher education is expanding globally, more students overall. And then there are demographic shifts happening in key markets that also feed into this demand for quality housing near campuses.
And didn't you mention universities themselves are changing how they operate?
Yes, that's a key strategic trend. Universities are increasingly saying, look, managing housing isn't our core business, so they outsource it to private operators.
Ah, creating ready-made opportunities for investors.
Exactly. It creates these fantastic, scalable opportunities for investors who specialize in this. It's good for cities to a stable rental income near their institutions. And if the local regulations are supportive of private development, that just makes it an even more attractive environment for investment, less risk.
Right, the outsourcing creates a pipeline.
Yeah.
That makes a lot of sense. Now, something else that came up in the sources, this idea of social responsibility. Is that just, a nice to have, or does it actually impact the bottom line here?
Oh, it absolutely can. It's becoming increasingly important. We're talking ESG, environmental, social governance factors, projects that genuinely incorporate these elements. Things like sustainable building materials, programs focused on student well-being, community engagement.
The E and the S of ESG.
Exactly. They resonate really strongly, not just with the students living there, but with investors too. Insights from places like Aylin's blog show that when you embed this kind of social responsibility, you build tenant loyalty. You get a much more positive brand image.
And that translates to
Lower turnover, fewer vacancies, and often you can actually command slightly higher rents because students and their parents see that extra value. They're willing to pay for a place that aligns with their values or just offers a better, more supportive environment.
So doing good can literally pay off.
It really can. Dr. Ghamari actually advises investors to actively highlight these ESG features in their marketing. It's a powerful way to stand out in competitive markets.
Interesting. Okay, shifting gears to something really forward-looking, cryptocurrency. The sources mention it intersecting with student housing finance. How on earth does that work? Sounds futuristic.
It definitely feels cutting edge, but it's part of this broader digital shift in real estate. Think about platforms like Gold. They kind of pioneered using blockchain for managing complex traditional assets, showing it could be done efficiently. Now, similar ideas are being adapted for student housing, using blockchain or crypto concepts to simplify things like tokenization, like we just discussed, or even crowdfunding investments.
So using crypto for the transactions or the investment itself.
Both, potentially. Dr. Ghamari explains that integrating digital currencies could speed up transactions, definitely lower the costs compared to traditional bank financing, and open up totally new ways to structure investments. It's particularly appealing, maybe unsurprisingly, to younger, more tech-savvy investors who are already comfortable in the digital asset space.
So it's tapping into a new generation of investors too.
Yeah, it reflects that wider digital transformation happening everywhere, including real estate. It's definitely one to watch. Still evolving, for sure.
Absolutely. Okay, so we've covered a ton. Stability, scale, tech, ESG, even crypto. Let's bring it back to the practical level. For someone listening, maybe thinking about this space, what's the bottom line? What are the key takeaways or the main things to track?
Right. To boil it down based on the sources, there are a few core things. First, location is paramount. You want to target areas with strong universities, good reputations, and ideally growing student populations. That's fundamental.
Makes sense. What else?
Second, leverage the tech. Use those digital analytics platforms like Aylin for solid market research, checking potential returns, ensuring transparency. Don't fly blind.
Use the data. Got it.
Third, actively integrate ESG. Think about sustainability. Think about the student experience. Use cause-related marketing. It's not just fluff. It builds brand value.
Right, the doing good while doing well part.
Exactly. Fourth, keep an eye on or even explore those emerging blockchain models for fractional ownership. They could offer ways to diversify and improve liquidity down the line. Still early, but worth knowing about.
Okay, explore new models. And finally,
you absolutely have to track your KPIs, your key performance indicators. Obsess over them. Occupancy rates, rental yield stability, tenant satisfaction scores, even how well your brand is perceived online. That's how you optimize management and ensure you're actually hitting those return targets.
so location, tech, ESG, new models, and constant monitoring. That's a pretty clear roadmap.
Wow, we really have covered a lot today, haven't we? From why student housing is so surprisingly stable, right through to how technology and these big global shifts are fundamentally changing it, it really shows how even markets that seem, kind of specific can be incredibly dynamic and offer unexpected potential.
It really does. And maybe a final thought for you to chew on as you think about all this. How might the way education itself keeps evolving, with online learning, hybrid models, more global connections, how might that continue to reshape what we even consider a stable or traditional investment in the future? The student housing story really is a fascinating example of innovation meeting a fundamental need.
That's a great question to end on. Food for thought, definitely. Thank you so much for joining us on this deep dive. We really hope you found this exploration into real estate, technology, and social impact useful, and we encourage you to keep digging.